Hello, and welcome to myfinanceteacher.org. Let's have a look at our review of markets again, and we are starting with the US dollar. A few days ago, back on the 7th of January over here, US dollar finished its previous short-term daily cycle, which lasted for quite a while, for 78 days. And the recent bounce in the US dollar, although not very strong, correlated well with a significant drop in gold. Over here at the bottom of the chart, you see the correlation between the US dollar and gold, and sometimes we forget looking at the US dollar when this correlation between the US dollar and gold doesn't stay consistently negative. More recently, though, over the last 2 to 3 weeks, this correlation between US dollar and gold has been consistently negative. So we are looking at dollar, trying to forecast what might actually happen to gold. So dollar is bouncing over the last few days. It's in a new short-term daily cycle, and this daily cycle so far has only been going for 3 days. So it's a very young cycle, and the question is, how long will the dollar continue to bounce upwards? That might help you to decide what you want to do with gold. And well, the previous short-term daily cycle in the US dollar bounced for just over a week. We have 8 or 9 days here. So if the same happens with the US dollar, if we still have another, say, 1 week or so of upwards momentum in the US dollar, some of the potential resistance zones for the US dollar are this 50-day moving average, that's just around 91. And another potential resistance zone for the US dollar could be this somewhere around 92. That's the bottom from early September and the bottom from early November. So possibly a bounce up to 91, 92, possibly over the next several days, 1 week. And it doesn't necessarily mean that gold must continue down for a whole week. But this bounce in dollar might actually put some pressure on gold. So that's why this significant drop in gold value, together with a very young new short-term daily cycle in dollar, made me a bit scared actually about my gold holdings. Rather than dollar, more significantly, this very large red candle made me kind of scared. And as I mentioned before, the 1850, which has been actually support resistance for a while, based on this late September and early November lows in gold, was an important level for gold to hold. And during the day back on Friday, gold did bounce a little bit from 1850 up to 1860. And when it continued down from 1860, I couldn't hold. And as you know, I sold the GDX and GDXJ positions, although I'm still holding the selected miners, which I think are likely undervalued. That's all in the fictitious portfolio. So what I think going onwards from here is, if gold regains and holds that support resistance at around 1850, that will be very promising. That will mean that the intermediate cycle just continues higher. That would also mean that we're entering into the new short-term daily cycle in gold. And I would definitely get back into GDX and GDXJ to increase my already quite substantial allocation to precious metals. But that's for the second daily cycle in the ongoing intermediate cycle. But talking about the ongoing intermediate cycle, it's right now 42 days old, and usually these cycles last somewhere between 1.5 to 2.5 months. So this is very close to 1.5 months. So possibly gold has actually finished the short-term daily cycle today over here. Possibly it's just ready to bounce upwards from here. But on the other hand, the cycle is not extremely long. It's actually pretty short right now. So I think, in my opinion, it's a bit more likely that gold continues down, maybe for those just another several days, while dollar bounces up into its resistance levels. For another several days down, give us a repeated poke below the Bollinger Bands, and a bit of a bounce from that repeated poke will be a sign that gold is entering into the second short-term daily cycle. Additionally, if gold does continue down over the next several days, and if it breaks too seriously below those Bollinger Bands, then some of the possible support zones below the ongoing price are clearly the round number of 1800. So I think there is a very likely bounce from that 1800 together with a second or third poke below the Bollinger Bands. And alternatively, if 1800s doesn't hold, then another support zone below that is this previous low at the end of November. That's at about somewhere between 1760 and 1770. A bounce from there, well, that will actually give us kind of a double bottom for gold, which might also be kind of a nice second chance for some of you to enter your positions. So gold is kind of concerning here. I guess we want to see what happens over the next few days as dollar bounces. On the other hand, silver is pretty interesting. It's still above its downtrend line that it has been respecting all the way since early October until the middle of December. Gold has already broke below this downtrend line, and as gold possibly continues down for another few days, with dollar strengthening a little bit, maybe silver also gives us a repeated poke below the Bollinger Bands and maybe some sort of a retest of this downtrend line. But generally for now, it's nice to see silver back above its 50-day moving average. Next, moving on to the general stock markets. They're continuing higher, although the futures right now are just 0.5% below the market close on Friday. So maybe there will be some red candles over the next few days. But so far, we see 4 green candles after that relatively large red candle. So I'm not 100% certain where to see the end of the ongoing short-term daily cycle. Are we still within the cycle that's going on for 70 days, which is not too long for these cycles in the S&P 500? Or did the cycle finish back on the 4th of January, lasting for 66 days? I think it's likely that cycle continues because that drop into the short-term daily cycle was only a one-day event. Usually it takes longer than that. So if the ongoing short-term daily cycle continues, we might see a more noticeable decline over the next few days, maybe to retest this 50-day moving average. But in either case, so far so good. As you know from the fictitious portfolio, I do hold SPY positions at the moment with some very tight stop losses. So if stock market just continues higher from here, say with some help from the government and the Fed, then I would be pretty happy with that. If the stock market gives us a short-term daily cycle low, say over the next few days, some sort of a correction down to 50-day moving average, maybe below that, a poke below the Bollinger Bands, followed by a continuation of the intermediate cycle, because it's only 106 days old at the moment, then I'd be fine with that as well. The relatively tight stop loss would be triggered and I would re-enter sometime near the bottom again to take advantage of the next short-term daily cycle. Talking about the intermediate cycle in S&P 500, it's 106 days old. Usually these cycles last for about a half a year. So there could be another 1 or 2 of these cycles before S&P 500 corrects down into the intermediate cycle low. Next, looking at crude oil, surprisingly, crude oil stays above $50, although we do see a small red candle over here. The intermediate cycle in crude oil is now 70 days old, so it's a relatively young cycle. There is still a lot of potential for crude oil to generally trend upwards, although I don't think there will be huge momentum to the upside. A general upwards momentum, because the intermediate cycle is still relatively young, but I'm a little bit surprised that the first correction into the first short-term daily cycle in the crude oil was quite mild. It only brought crude oil slightly over 6% down. On the other hand, perhaps the short-term daily cycle is still continuing and we might see a stronger correction, possibly over the next 1 or 2 weeks. But even if that happens, in the intermediate term, I think crude oil is still relatively attractive. So moving on from crude oil to XLE, after a more noticeable correction in XLE back in the second half of December, as crude oil continues higher, I think there is a pretty good chance for XLE to give us interesting gains, possibly over the next several weeks. As I mentioned in some of my older posts, the next resistance zone above the current price is based on this summer high. That's somewhere about 47 on XLE. So if that happens over the next few weeks, that would be something around 12% gains or so. That would be quite nice. Next, continuing with the energy, let's move on to natural gas. Just as I mentioned in, again, some of my older posts on natural gas, I still expect natural gas to continue sliding downwards with these short-term bounces from possibly lower ranges of the Bollinger Bands. That's all because winter is relatively warm, and maybe over the next several days, over the next week or so, there'll be another chance for very short-term, quite risky trade in natural gas to catch its bounce from the lower range of the Bollinger Bands and maybe a bounce from this 200-day moving average. On the other hand, looking at the longer intermediate cycle, it's now 112 days old. Usually these cycles in natural gas last for around half a year or so, so we'll possibly still have several weeks of general downward momentum. Next, moving on to coffee. Coffee is kind of interesting, but it's getting a little bit less interesting lately, actually. The cycle is now 68 days old. On one hand, there is still some potential within this cycle because it's not extremely old. We are possibly just approaching the midpoint. But on the other hand, with several red candles last week, there's a good chance that coffee did already reach its top over here on the 4th of January, and maybe with some short-term bounces, it might actually continue sliding down into its intermediate cycle low. Usually these cycles in coffee on average, at least over the last few years, lasted for around 145 days. So coffee is pretty volatile, maybe some short-term bounces upwards, but generally I'm not sure if it's a very attractive proposition for me at the moment. And lastly, let's have a look at uranium. Uranium price seems to be bouncing from this cycle low back in the middle of November, although this bounce is kind of weak. It's not strong at all, but the good thing is that uranium is still holding above its 50-day moving average. So far, this uranium cycle is 50 days old, and usually over the last few years, the cycles in uranium lasted for around half a year or so. Another thing on the chart, I think I mentioned this before, so let it just be a small reminder. There was a positive divergence between RSI and the price action all through September, October, and November. So now I think we still have at least several weeks of upward momentum in uranium, possibly even longer. And another good thing on uranium is that uranium producers are actually outperforming uranium prices. That is also an interesting sign. So generally that is all for today. Let's see over the next few days what happens to gold. Is it going to bounce from here, giving us a low today? Or is it going to give us a low a little later over the next several days? I hope you guys had a good weekend. I wish you a productive day and good luck in your trades.